Hello everyone, today I want to talk about how geopolitical conflicts have led to new business opportunities in Hong Kong's policy address. Furthermore, China is aggressively targeting Nvidia's chips, putting its multi-billion-dollar annual business in China at risk. The US and China have reached a phased trade framework, but this won't prevent China from taking countermeasures against Nvidia's chips. The Financial Times reported on September 17th that China's internet regulator has instructed the country's largest scientific companies to stop purchasing all artificial intelligence chips from the American scientific giant Nvidia and terminate existing orders. The report, citing three sources, said that the Cyberspace Administration of China, CAC, this week instructed mainland private tech giants like Nvidia and Alibaba to halt their orders for Nvidia's latest RTX Pro 6000 graphics cards. Backwork servers and graphics processors are being tested, and orders for the latest version of the chip have been cancelled. Bloomberg quoted supporters mid-August as saying that the Sino-Japanese official newspaper scandal has urged domestic companies to avoid using Nvidia's older H20 chips, especially for applications related to the Chinese government. On the other hand, Chinese officials said on September 15th that Nvidia violated China's antitrust law. Nvidia responded the next day, saying that the company strictly abides by laws and regulations in all aspects. China launched an investigation into Nvidia in October last year, alleging that it was suspected of violating China's antitrust law and the commitments made when it acquired Israeli chip design company Mijlos Technologies in 2020. Wengzhou Technology was founded in Israel and listed on Nasdaq in the United States. The company produces high-speed network equipment for data centers. Nvidia will bundle it with its AI chips. Wang Weiji, chief semiconductor analyst at Full Term Group, a research firm, said the real concern is that China may introduce new measures to restrict Nvidia's ability to sell networking solutions to Chinese customers. This business is worth billions of dollars to China each year and continues to expand as data centers grow. Wang Yijie added that Mijlos equipment plays a vital role in providing Nvidia with the world's most advanced networking technology, second only to its competitor Intel's CUDA computing platform. Given the strategic importance of networking technology to Intel's overall computing competitiveness, Wang Yijie expects Nvidia and US officials to seek cooperation with China in this area. In recent quarters, the overall networking business has become increasingly important to Nvidia. In the second quarter of this year, its related sales reached $7.3 billion, a year-on-year increase of 98%. Reuters said that Nvidia has been troubled in China for some time, and its founder and CEO Jensen Huang hopes to launch a strong offensive in China. He has already made 3 attempts this year. His visit to China showed his commitment to the Chinese market, but now it seems that these actions are not enough to offset the pressure. Once upon a time, due to some shortcomings in China's technology industry, especially in the core chip field, in order to avoid affecting the supply, the market generally expected that Chinese law enforcement officers would not easily take action against American chip giants. But now China is clearly confident enough to deal with the illegal and irregular activities of chip giants. Behind this confidence is the collective breakthrough of China's technology industry. At this sensitive moment, China intends to disclose some news about domestic substitution of artificial intelligence chips. The Yingxi News Network reported on September 16th that China Unicom's Sanjiangyuan Green Power Computing Center project was successfully built. 72% of the chips in this center are provided by Alibaba's Ping2G platform. The rest are mainly from several Chinese companies. In addition, China Unicom also plans to further purchase AI chips from 3 Chinese companies. In particular, the table in the report shows that Alibaba Cloud has signed contracts for 1,024 devices, including 16,384 Ping2G computing cards. The total computing power is 1945 petaflops. According to the footage, Ping2G's newly developed free AI PPU chip has the same memory capacity as Nvidia's H0 chip. According to the Qinghai provincial government website, China Unicom invested $390 million in this data center in Xining, the capital of Qinghai province. Upon completion, it will have a computing power of 2 teraflops. After reading these news reports, a clear picture emerges. First, even though China and the United States have reached a partial trade framework agreement, China has not stopped its AI chip development. It even directly stopped a technology giant from testing Nvidia's latest Blackwell architecture server. Earlier, when Wang Yanfen met with Trump, she discussed Blackwell architecture servers and related chips. Trump said a 30% reduction would be required. It's okay to sell computing power to China, but now China wants to block the sale of this new chip in China. Secondly, China's move has 2 possible goals. The first is to help China and the United States, possibly before the phone call this Friday, compounding its own ugly behavior. The second is that it seriously doesn't want Chinese companies to rush to buy Nvidia's latest version of the chip like a whirlwind, hoping to make more room for domestic chips. It seems that the latter possibility is greater. China is already determined to take the path of domestic substitution of AI chips. I also want to talk about the chief executive's observation in the release of a new private message report that the Sino-US political conflict has created many new business opportunities for Hong Kong. In the past globally integrated world, Hong Kong may not have had these opportunities. Since the United States proactively provoked a trade war with China in 2018, the Earth has been conceptually split in 2. After the outbreak of the Russia-Ukraine war in February 2024, the US and the West imposed extreme sanctions on Russia, banning the use of the SWIFT wire transfer communication system and freezing assets belonging to the Russian government and even individuals. As a result, assets are abandoning the US and Western financial systems, and the risks have greatly increased. Meanwhile, Hong Kong, situated in the Eastern world and serving as an international center within China that faces the world, is experiencing unprecedented development opportunities. To seize these new opportunities, we are making a concerted effort. In addition to fully accelerating the major development plan of the Northern Metropolis, the report also vigorously advances several other areas. First, the development of a super financial center. In the past 2 years, Hong Kong's financial industry, especially the stock market and wealth management sector, has seen significant progress, and we will continue to build on this. With a clear development direction for the stock market, it will become even easier for overseas companies to list in Hong Kong. Some foreign media have noted that the chief executive mentioned Hong Kong will become the world's largest cross-border wealth management center. In addition, Hong Kong will also develop the virtual asset market, filling the gap left by the mainland's decision not to develop this type of financial asset. The report further proposes that Hong Kong develop an ecosystem for commodity trading, offering a half-tax incentive for commodity traders to set up in Hong Kong. The government will establish a commodity strategy committee to develop related businesses with a particular focus on gold trading. As everyone knows, gold trading is very active in London and Switzerland. In addition to spot and futures trading of gold, both places also have extensive storage, refining, and cutting facilities. Switzerland does a lot of this kind of business, not only storing gold but also cutting it and selling it to the United States. The policy address proposed expanding gold warehousing in Hong Kong, aiming to exceed 2,000 tons within 3 years and build it into a regional gold storage hub. Hong Kong's development goals include not only storage, but also promoting the establishment and expansion of refineries in Hong Kong and using mainland research to process and refine gold in the mainland before bringing it to Hong Kong for trading or delivery. It also proposed establishing a Hong Kong gold central clearing system to provide reliable clearing services for international gold transactions. In addition, new products will be developed, such as tokenized gold products, to strengthen the attraction of the Belt and Road Initiative and improve customer utilization of Hong Kong's gold market. After the outbreak of the Hong Kong stock market war, London and Switzerland joined the ranks of sanctions against Russian-related entities and even confiscated their assets. This created a new opportunity for Hong Kong, as Hong Kong investors have a safer choice. The second supranational service center. If Hong Kong is to be a supranational, contacts may think this isn't a new concept, simply providing legal and accounting services. However, as a manufacturing superpower, China, after satisfying its domestic market, is now seeing many companies expand overseas. Hong Kong can serve as a service center for Chinese manufacturing, helping them expand internationally. Today's implementation report advocates for new policies to establish a dedicated task force for mainland enterprises going global. This team, comprised of policy bureaus, professional institutions, and financial authorities, will provide mainland companies with temporary support for entering overseas markets. The Financial Services Bureau will also sign a joint venture with the Saudi Public Investment Fund to establish a new $1 billion investment fund to support companies in Hong Kong and other Greater Bay Area cities in exporting to Saudi Arabia and other regions. In the past, mainland companies looking to expand internationally would first consider the professional services offered by American institutions. However, in today's highly politically competitive environment, Hong Kong can offer them safer and more reliable services. A super talent center. Amidst the geopolitical conflict between China and the United States, even though there has been a recent easing of tensions, the Trump administration continues to suppress academia, forcing a large number of American scholars to seek overseas development. Hong Kong will vigorously attract them. At the same time, Hong Kong will also attract talents who have gone abroad for development. The implementation report mentioned that the renewal rate of the Gao Kaitong program is 55%, bringing about $34 billion in economic contribution each year. The talent attraction program will be vigorously promoted in the future. After reading the implementation report, some people may criticize the government for not distributing money to ordinary citizens. Some people may criticize the government for not directly changing the catering or retail industries. However, with the changes in Beijing, traditional industries around the world have been severely impacted. If the old ones leave and the new ones don't arrive, Hong Kong will become a stagnant place, just like Detroit in the United States, once the automotive capital, now a deserted city. The Jinzhong Mingdu restaurant is usually so deserted that it's on the verge of closing, but he's been waiting for a table for the past few days, up to 45 minutes. Diplomacy isn't inherently a bad thing, but everyone needs to look to the future. The implementation report calls for Hong Kong to develop into a super financial center, a super service center, and a super talent center, introducing a large number of future new industries. These aren't quick service policies meant to attract public attention, but they can open up new opportunities for Hong Kong.